Good morning, everybody, and welcome to another QB Power Hour. We're very glad to have you all joining us today. Today's topic is common mistakes in QuickBooks Payroll. This is an ACE-approved webinar today. An ACE-approved, that means Advanced Continuing Education Credits for today's webinar if you're attending live. Hector will go over more of those details when he talks about CPE in just a moment. So real quickly, we're going to give you a quick overview, let you know a little bit about QB Power Hour, and your host, Hector and myself. We'll talk about the CPE process. Then we're also going to get in and talk about common mistakes in both QuickBooks Desktop as well as some in QuickBooks Online. And we're going to help you also learn how to correct those mistakes to help avoid any issues with your accounting or the payroll taxes. So about QB Power Hour, Hector and I do these usually twice a month, every other Thursday. Love to have you join us for some of those. There's the dates for the upcoming ones. Normally we talk about QuickBooks Desktop and QuickBooks Online. Sometimes we'll do all desktop or all online. And a lot of times we'll bring on special guests to talk about third-party apps or practice management, or like Mark Wickersham joined us last time for value pricing. So trying to bring you good content every episode. So we hope you'll keep joining us for those. For those of you that don't know me, my name is Michele Long. I am a CPA and the owner of Long for Success. I'm located in the Kansas City, Missouri area where it's been hotter than blazes lately. I don't know about you all. I'm also a trainer for Intuit. I've met lots of you, and I just love it when I go around to these various cities and I ask how many of you listen to QB Power Hour, and a lot of you raise your hands, and I like meeting you, so I think that's wonderful. Author of several different books. You can check those out on Amazon. And Hector, you want to introduce yourself?
Yes, hi everybody. My name is Hector Garcia. I'm a CPA, an accountant based out of Florida. I teach QuickBooks in my own classroom down here. I'm a member of the Intuit account. I'm participating on the Intuit Accounting Council this year and next year, which has been a lot of fun, giving Intuit direct feedback about the product and the industry. And there's my email and my Twitter handle if you want to communicate with me, and I'm really glad to be here.
All right. You want to tell them about CPE?
Absolutely. So if you need CPEs, if you're a CPA or a certified bookkeeper or any other equivalent credential that requires continuing education credits, you must attend the webinar live. We will record all of these and put them in YouTube as always, and post them in our website. However, you have to watch them live, and you must be logged in for at least 50 minutes for you to get the credit. And we're going to give you a CPE keyword or a password somewhere in the middle of the webinar, during the beginning or towards the middle. You have to write that down, and then at the end you're going to get a polling question which you have to answer. You have to answer correctly. If not, we won't give the CPE certificate. Give us 2 to 3 weeks, typically 3 weeks, to give those. And as Michele mentioned, today's course is in fact ACE eligible. That means if you're a QuickBooks Advanced Pro Advisor and you take this class and you're eligible for CPE, you're eligible for ACE as well. We send the information to Intuit. I believe we are still responsible for self-reporting for Advanced Pro Advisors, those advanced credits. However, we do send the list to Intuit so they have it as a record. Michele?
Very good. Thank you, Hector. All right, so I'm going to talk about QuickBooks Online first, and then Hector will talk about QuickBooks Desktop in just a few minutes. So remember, we're talking about some common errors that you might encounter working with your clients and how to fix those. So first of all, we do see a lot of issues come up, or a lot of people might see some issues when they're migrating, when you're converting from QuickBooks Desktop Payroll to QuickBooks Online Payroll. And so about a month or so ago, we did a 1-hour QB Power Hour with the Intuit Product Manager, Blaze. He joined us, and he went through the full migration process, converting from QuickBooks Desktop to QuickBooks Online, and he went through, how to do that conversion, how to clean things up, the pre-migration checklist, how to make sure things are cleaned up prior to the conversion so that you avoid some of the mistakes and things. And he also talked about it, making sure that you do this or you do that to avoid any mistakes that you might have in that conversion process. So I'm not going to cover some of those mistakes or issues that might come up. Instead, there's the link to that recording for that QB Power Hour. You can watch the archive there. If you write down that bit.ly/payroll conversion 2016, you can go back and watch that 1-hour episode. I encourage you to, because he had a lot of great information, as well as a migration path, like, if you're coming from Mac or if you're coming from QuickBooks Desktop, he had this whole lineup on migrating to either QuickBooks Online Payroll or Intuit Online Payroll, talked about a lot of those details. So check out that recording if you need more information on some of that. Now, the next thing that's been an issue with working with QuickBooks Online Payroll is voiding or deleting paychecks. And in the past, you would have to either, let's say, right now it's the middle of July. Let's say I needed to void or delete a paycheck from May or June. In the past, we'd have to go back and delete all of the subsequent paychecks. So in other words, if I needed to void or delete a paycheck from May, I would have to also delete all the subsequent ones all the way through July in order to make that correction in May and then re-enter everything. You don't have to do that anymore. They now have new void and delete options. So you don't have to delete more checks than you need to, or you don't have to contact Intuit support or customer care to help you with those corrections. So when you go to a paycheck, which I happen to have one up here. This is fictitious, of course. So I've got a paycheck up that I would like to void or delete. Down in the bottom, see in the middle of the bottom where it says void or delete, if you click on void or delete, it's now got this new little wizard that's going to walk you through. Oops, I guess, all right, let's try to get that again. Void or delete. There we go. And it says, has this check been cashed? If I say yes, then you'll say, it says we'll help you to void it. If you say no, it's going to say, we'll help you delete it. So it's going to walk you through how to void or delete that. So that's a nice new improvement that we have. And I also have the link here to the knowledge base article so that you can go in and it gives you all the details. But it's really easy to just walk through that little wizard to do that now. So I don't know about you guys, but I think that's big because it was such a pain to try to fix those things in the past. Now it's going to be a lot easier with this new feature here, this new tool to help us with that. Also, whoops, back into my PowerPoint. Then the next thing is when the taxes are paid outside the normal workflow. And so let me go through real quickly. I'm going to go into QuickBooks again and show you what I mean by this. If I can get to the right one. Whoops. All right. I'll find it here in just a moment. There we go. All right. No, I'm still on the wrong one. God dang it. I'm having fat finger issues today. Sorry about that. All right, it's not this tab, it's this tab. Okay, on your home screen, so what happens with this mistake? See how it says we have tax forms that need to be filed and we have tax payments outstanding. So we've got some tax liabilities that need to be paid. Well, instead of going through the payroll taxes area and paying them properly, somebody went in and maybe they just did it outside of QuickBooks. They logged into the EFTPS website, did it outside of QuickBooks, and made an online payment to pay for it. Maybe they wrote a normal check to pay their payroll taxes. So somehow outside of the normal workflow. They didn't do it the right way by coming under taxes and payroll taxes over here to do that. So how do we get rid of this on here? That's what we're talking about. So first of all, there's a few very important things here, and I've got a lot of details here so that you'll be able to look back at these slides and see the details without having to write all this out. First of all, you do not want to go in and just click on payroll pay taxes because that's going to result in a duplicate record. You'll enter it twice in QuickBooks, and if you're set up to e-pay through the EFTPS or your state system, it could actually create a double payment. So don't go in and click on the payroll taxes and pay it the correct way because you're going to have a duplicate entry in QuickBooks now. However, they paid it wrong to begin with, and now you just did it this way, and it also could trigger a double payment. So do not do that. Instead, what you want to do is go under the taxes and payroll taxes, enter the prior tax history. Okay, this is going to make sure that it's recorded in payroll properly and all that. So let me show you how you would do that. And again, I'm on the wrong tab. So what you do instead is you're going to come over here under taxes and payroll tax. You're not going to click to pay the taxes. Remember, we just said that could create a duplicate. Instead, scroll way down in here. See where it says enter prior tax history. May just have been last week, but it's prior tax history. So you're going to enter the payment that was made right here. So we entered a check. Let's pretend we entered a check for that. So it's already in QuickBooks, but we didn't get it updated in our payroll tax history. So you're just going to come in here and add the payment for that. That's going to update the payroll tax records for you and avoid the duplicate payment. So it's really easy to do. You just have to know the proper steps on how to do that. So hopefully that will help get you back on track with fixing that one. So again, you're going to go in there, enter that payroll tax history. Now, one thing that's not mentioned, here's the KB article that talks about the details for that. Here's what's not mentioned in that article. All right, if you had a penalty for late payment or any service charges or anything like that, so if you owed your payroll taxes plus, you know, a $50 late payment penalty or something like that, do not enter that with that. When you're entering the payroll tax history with that tax payment there, do not include that, the late fee, in that payment, because then it's going to be considered an overpayment. There's no way for you to differentiate that the payroll taxes were $500 and the penalty was $50, okay? So just enter the $500 as your prior tax history. Don't enter that late payment penalty. Does that make sense? It will still be recaptured from when you entered the check incorrectly. You still entered that and hopefully posted it to the penalties or service charge or whatever, but don't enter that in the payroll tax history because that can mess up your reports and can create an overpayment on the tax liabilities, okay? So hopefully that'll help you avoid that mistake. Now, another mistake that we may have periodically is duplicate pay schedules. Somebody set up, you know, monthly, and somebody set up, you know, monthly dash salary or something like that. Somehow you have a duplicate pay schedule out there, so you can't pay all the monthly employees on one schedule. So you'll see out here we've got two that are every Friday. You know, you want to just do one, and you want to combine those two. So that can be very annoying and troublesome, but it's actually easy to fix that thing. What you're going to do is you need to go in and edit the pay schedule. And then what you're going to do, so you're going to edit every Friday and change it to something like, let's say, delete me. Then you're going to go in and edit all of those employees and change them to the real every Friday. So move them from the one that you're going to now delete, move them to the other pay schedule. Then you'll be able to go and do that. So under your pay schedules, let's see, I keep going into the wrong one. Under your pay schedule, so you're going to go under the gear. You're going to click on that big gear and payroll settings to get into the payroll settings. Once you are into the pay settings, here's where you'll find pay schedules. You'll come into the pay schedules and edit the name of one of them to rename it something like delete me. So under the pay schedule, see how I have every Friday and every Friday? I would edit one of them to come in here and change it to be something like, you know, delete me or whatever. Then you're going to go into each employee, move them over to the right pay schedule so that you can get them all on the same pay schedule. Does that make sense? It's really easy once you figure out how to do that. So again, a pretty quick fix once you know how to do those things. Those are a few of the online payroll. Remember, there's more mistakes covered in the other QB Power Hour on conversion. So watch that 1 hour recording as well. All right, our CPE keyword today is iced tea. Iced tea, and somebody says that they'd like to see desktop because this is supposed to be a desktop webinar. Diane, we're converting, or we're going to start talking about desktop payroll right now after this CPE keyword. We wanted to get a little bit of online in there as well. So switching over to desktop in just a second here. So the CPE keyword is iced tea. When it's really hot in the summer, I like to drink iced tea. Hector, how about you? Do you like iced tea?
Yes, I drink iced tea every day.
All right. So write down the CPE keyword iced tea. Write that down, and at the end of the webinar, there will be a poll question, and you're going to answer that poll question with the CPE keyword. Okay, so iced tea. And we had a question from Judy. Can I add independent contractors to payroll so they can get direct deposits? Not with QuickBooks Online Payroll. Okay, so Judy, you cannot do that with QuickBooks Online Payroll. Okay? All right, iced tea one more time. Hector, I'm going to go ahead and change the presenter over to you and let you cover desktop payroll.
Perfect. Let me just make sure that you can see my screen.
And good, Tiffany had that question about how to handle that penalty, so I'm glad I covered that, Tiffany.
Right, awesome. Let me see. Can you see my screen now?
No, it came back to me. Let's do that again. Somehow it came back to me.
Hold on.
Hector Garcia.
No,
yes.
no. I'm logged in as you in the different computer, so I think I'm good now. There you go. I think you should be able to see my screen.
Now, okay, we can see your screen. All right, I'm going
Perfect.
to mute myself. Go ahead.
Thank you. Thank you very much. All right, so we're going to do the rest of the hour or the next 40 minutes or 45 minutes or so will be on the desktop payroll. Now, desktop payroll has a lot of additional sort of moving parts. So we're going to go a little bit slower, and we're going to take just the top 3 issues. One thing I want to make sure that you do have handy is if you look in the handout section, and then if you can't download the handout for some reason, we'll also put this in the chat box, and also we'll send the email blast with the comments. It's a document called Common Payroll Errors, which I'll just show it real quick here that I have on my desktop. It's probably the best document out there for troubleshooting the most common QuickBooks desktop errors. Let me just make sure that we pull them up here. Should be able to see the document now. So this is a document that's on the handouts. It's 8 pages. It contains how to fix the 3 most important errors. It still has the screenshots of the sort of the oldest QuickBooks 2010, I believe, but the QuickBooks hasn't really changed. The payroll stuff hasn't really changed since then. So so the document's still good. The document's still excellent. So use that as a reference. Just want to keep that in mind. And so basically on this webinar, I'm going to use a lot of the stuff that's in there, but we're going to do sort of a real detail, deep dive into this common error. So common error number 1 is not tying the GL to the payroll items. In other words, not mapping the items correctly. Now, what problems could this error cause? So one of the problems that it could cause is the presentation of the profit and loss and balance sheet may be confusing. Okay, that's one of the most sort of the obvious ones, right? So by not tying the payroll items to the correct GL accounts, you're going to have confusing financial statements, or quite possibly not confusing, difficult to detect errors, right? The other thing is it may not be compliant for reporting items on the tax return. So if anyone here prepares tax returns, they know that certain things need to be split out, they need to be displayed in certain ways, and it would require you to have multiple reports or extrapolate the information from some of the tax forms in order to be able to get it. So ideally, you want your profit and loss to show that. So what are the common confusing configurations of chart of accounts that I see out there? Well, you have an expense account called Payroll Expenses, and then one called net paychecks, and that's assuming somebody would even think of putting the word net paycheck there to imply that it's truly a net paycheck. Sometimes people would just put it under wages or just payroll or just right there on the parent account. And then all the payroll taxes bundled together, all the payroll fees bundled together. In some cases, they put the payroll fees on the payroll taxes, health insurance and retirement pension plan, 401k, all into one lump sum payroll expense account. I actually dislike that. It's not easy to read, and it's very confusing, especially for preparing tax returns. And the worst thing also is having just one big payroll liabilities account where everything is dumped in there. So I think that what you're seeing on the screen here, on the left being the profit and loss accounts in your GL, and the right being your balance sheet accounts in your balance sheet, that would be the wrong way of doing it. The right way of doing it, in my opinion, would be having your P&L broken down with payroll expenses as one parent account, gross wages, not net, gross wages, officer and non-officer split, very important. Certain corporations have to separate it just because of tax purposes. Payroll taxes should be its own expense account with the subcategories of FICA, FUTA, SUTA based on the tax form that you're sending. So the 940 form, the 941, 940, and whatever your state form is called. And then if there's an additional local payroll tax, have that in there. Have a separate expense account for fringe benefits where you can have company paid health insurance, tuition assistance, and other health insurance like dental or life insurance. You can put that there. Pension plan, profit sharing, 401k, company paid, that should absolutely be its own line. Employee paid 401k, employee paid pension, that should all be part of gross wages anyway. But a company paid should be its own expense account. And then in some cases, if you have an S corp or a partnership in which you're required by a law to separate the shareholders' health insurance, you would not have that under fringe benefit. You would have that under a separate line all up in itself, because that may likely not even make it through the profit and loss or to the taxable income line. That will be adjusted in the Schedule L in the M2 form on the tax form. Okay, this is for tax people. But anyway, you have to separate the shareholder portion of health insurance for most of these pass-through corporations. And for the balance sheet, this is the way I like to see it. The way I think is the sort of the correct advanced way of doing it is to have, you know, a payroll tax payable sub-account under payroll liabilities, and have all of those split under each tax form, have direct deposit liability as a sub-account of payroll liabilities, pension 401k payable under payroll liabilities under its own account, insurance payable, and other fringe benefit payable. So that's, I think that would be the most clean way of having it organized. So now we're going to talk about how to fix it. What's the exact process of fixing that? So we want to go into each payroll item and change the GL account that they point to. Now at some point you may have to go into your chart of accounts itself and add all those accounts and fix those accounts. So I'll show you that example. And also the most important question is, if you have had payroll in the past, do you want that to go retroactively, go back and fix the entire year, or at least the last close period? I strongly recommend that. That way you have some consistency in the process. Okay, so let's go into the demo here and just kind of show you. I have this QuickBooks file I created just for payroll. So let me show you how this is done now. So you have a wages category, which is like just sort of the gross wages and everything bundled together in there, and then we have the payroll tax expenses all as a single fee. So going from that example, let me go ahead and move this P&L over to the side. I like to having sort of a live P&L refresh right before my eyes when I'm doing these things. So I'm going to leave the P&L up, and then I'm going to go into my payroll item list, which I'm going to bring here to the right side. Okay, perfect. And then I'll come in here, and then I'll start with editing each of these accounts. So I'm going to go into federal unemployment, edit the payroll item, and then I'll change the account that it points to. So see how this is going to payroll expense, payroll tax expense, and my recommendation was to make a sub-account. So I'll just put a column there. That's a quick way to do a sub-account, and I'll just put here 940, or I can call it FUTA. Actually, so either way, it doesn't really matter whether you want to put FUTA or if you want to put 940. It works either way. So I'll hit tab there, click on setup, so the expense sub-account is created on the fly. And then on the payroll liability, same thing. I want to have payroll taxes as its own account. So I'll do a column there and just type payroll taxes, hit tab, and then I'll click on setup. This is kind of the fastest way. Put the column, and I'll put here form 940. At least on the liabilities, I like to actually name them the way they're named on the forms. That way it makes it extremely easy for me to look at the balance sheet and look at my forms and see exactly that these things tie together. So I'm going to click next here, and then I'll click save and close. I'll hit next, and then next, and finish. Okay, and then this is the big question here. The big question is, do you want to update this retroactively? That means every single paycheck you created in the past will be affected, or do you not want to update them, or do you want to go back even farther back several years ago? So this is it's a great question that is asking you, because it can have all sorts of implications. In my opinion, we should always go back to the fiscal year, to the current, not fiscal year, sorry, calendar year, the current calendar year, to make all the tax forms tie, regardless of the fiscal year of the company. So it is possible that in some cases you have a conflict where you have a fiscal year that has been closed and audited, and then you're making transactions that are going to cross that fiscal year and go to current calendar year but cross fiscal year. So that's something for you to think about. So at least, you know, if your fiscal year closed 3/31/2016, at least put this 4/1/2016. I would say at the very least, if you actually closed the calendar year, the fiscal year on March. But again, I recommend going all the way to the calendar year. So I'm going to click on OK, and then I'm going to click on OK. It's asking you to double check. And then once I go to my P&L, I should see now my P&L being cleaned up as we go in real time. So I actually love doing that. So I'm going to go into Medicare, do the same thing. Payroll liabilities are going to go into payroll taxes. I'll go ahead and put that into Form 941. And yes, you do have to know a little bit of payroll taxes and know what the forms are and stuff, all this stuff to make sense. And both company paid and employer paid, they will both have, employee and employer paid would go into the same liability account. That wouldn't change. And then for the payroll tax expenses, I would do the same thing. That would go under FICA. That's the name. Some people call it Social Security and Medicare, but I'm just going to call it FICA. It's easier. So I'm going to call it FICA and then do next, and finish. And same thing, I'm going to go all the way to the beginning of my calendar year. Hit finish, and then I should see that P&L sort of being fixed on the fly. By the way, when you fix Medicare, both company and employee get fixed on the same shot, so I don't have to do employee now, so I can just jump to Social Security and do the exact same thing. So I'm going to put this under 941, hit next, and put this guy under FICA, and then hit next, and finish, and OK, and OK. And then the last one that we have, actually we have two more. We got the federal withholding, which is going to go under Form 941, and notice that there's no expense account being asked because this is completely cash coming from the employee, so there's no expense category in there, so that's not going to affect my P&L. And the last one would be my state unemployment. This is the one for Florida. It's called Florida UC Fund, so I'm going to put that under its own account here. We're going to call it Form RT6, and this will be different on every single state, right? They're going to have different foreign names for that, but the overall configuration should be the same. In this case, this would be SUDA. So regardless of what state you're in, you're going to have SUDA no matter what. So I'm going to go ahead and hit next, finish, and OK. And now I should see my profit and loss starts getting organized really, really neatly. Same thing with the balance sheet. I'm going to go ahead and pull up a balance sheet here, and we can see our payroll taxes are all organized based on the tax form, and that's the best thing to do because then you start tying that with the form itself, and it just makes so much sense. So that's the first major mistake, is not mapping it correctly, which again, the potential problem you can have is things just look strange and that sort of thing. Like for example, you see something that looks strange here, that line right there, we're about to get to that, so we'll talk about that briefly. That was an example that I created before just to show you some of the common errors that happen there. So I'm going to leave my P&L and balance sheet up here, sort of side to side. So as we're doing things, we're seeing these things updated on the fly as they're supposed to. And I'm going to go back into the slides now. So let me go back into the slides, and then the next common error here is going to be paying payroll taxes or penalties with a check. So payroll taxes are due, and instead of following the correct workflow of using the pay liabilities window, which is specific transaction type, they just use a check and pay the payroll taxes with that. I'll show you an example of that. So what problem could that cause? Well, number one, payroll liabilities are going to be overstated because the payroll liabilities are still going to be there, unless somehow they use the correct payroll liabilities account, and then in that case it wouldn't be overstated, but it will be on the payroll module, so we'll discuss that in a second. Payroll tax forms will not show the correct payments made, even though the payment was made, because we didn't use the right tool itself, so I'll show you that. Payroll taxes could be overstated because possibly they wrote the check and put it into that particular payroll taxes expense account by mistake. And meanwhile, all these things happening, the banks will appear to be correctly reconciled and perfect. So the banks itself will not help us detect this error. The only thing that will help us detect these errors is when we go into our balance sheet and we see the liabilities, and then we go into our payroll module and see the liabilities and see those things sync up and square together. So we'll talk about those. So what's the process to fix them, which I'll show you a demo on. We're going to find the check that we created. If it's a current check, that means it's not outside of the current payroll reporting period. That means we just did it a couple of days ago. And it's been, let's say if it's within the current payroll period, we'll just delete it. Okay, in this case, I think I wanted to put it's unreconciled, I wanted to say. So if it's within the current payroll period and it has not been reconciled yet, just delete it and create a normal paycheck or a paycheck liability. That's really what I meant there. A liabilities payment. I really meant to put there. Apologize for that. So so a regular liabilities payment, or if the check has been reconciled and is outside of outside of the current reporting period, then just take that and use the. So we'll show you all this with the example. I think will make a lot more sense. So let me go into the balance sheet here and show you what I have. I have a check that I created. Click here. See, I see a liability check. Here you go. I have a check that I created, and I put payroll liabilities. Okay, so that's definitely a problem, right? Because you should not have any regular checks whatsoever being used to pay a payroll itself or pay a liability of some sort. So this is going to cause a problem. Let's assume that this is the vendor EFTPS. Let's assume that from that perspective, that was correct. It was paid to the government, it was paid on time, and then they wrote a regular check to pay liability. So what will end up happening is it is possible that my liabilities are correct somehow, right? Because if we actually look at my balance sheet here, you see that there's a liability of $29.79 here, and then you see a check negative that is down here. If I were to simply tie this now into the correct sub-account, then and ignore this error message, because that's the important one telling you, by the way, this is wrong. If I were to do that, I'm going to essentially hide the error of my liabilities issue in my balance sheet. So at this point, it looks okay. So accounting-wise, my banks could be okay, my liability can be okay. My problem is my tax forms are not okay. That's my issue. My tax forms do not show that as an actual payment, and my 941s will not be reconciled. The other place where you can detect that there's an error, when we go under employees and we go under payroll, I'm going to expand this here and go to pay liabilities. Notice how there's a line there that says overdue, 2972.72. My clients all the time come to me and say, Hector, my form is showing all sorts of tax payments that are due when they're not due. I could prove it to you. Let me show you. I went to EFTPS and I paid it, or I sent a check, whatever the situation may be. So it is possible that you are squared up with the government. Yes, you wrote the check. Yes, you sent the check. Yes, they cashed it. It is possible that I'm squared up with the government. And I look at my balance sheet, and my balance sheet, as I showed you earlier, my balance sheet is squared up because I used the correct liability account, because accounting-wise I did it correct. But in this form, it still shows me an issue. So there's essentially two ways to fix this. I'm going to show you both techniques. One of the ways to fix it is to actually pull up what this liability would have been. Here you go, view and pay. And you see there where it says federal withholdings, and I should write all these down here, make sure that I have them correct. So I'm going to write down all those numbers somewhere. I mean, if you can print it and it prints out, that's fine. But you should write these down somewhere, and then we're going to create an adjustment in the adjustments window. So I'm going to hit save and close here and show you, and then I'm going to go into, whoops, I paid that by mistake. Let me go ahead and delete that because that wasn't correct. Where's my liability checks? I'll go ahead and delete that one check I did just now. No, it was this one. So this is the one that I just did. Let me delete that because I don't want to mess up my bank. Again, that check has already been cleared. It's outside the payroll period. So what I want to do is just make the correction. So again, I'm going to go into employees. I'm going to go into payroll. And then I'm going to click down here where it says adjust payroll liabilities. Remember, I told you to write it down, so we're going to discuss that in a second. So we're going to click on adjust payroll liabilities, and then we're going to put 06/30/2016 because that was the reporting period. And then we're going to go here where it says item name, and we're going to put federal withholding, and then we're going to type here the stuff that we wrote down. So 1254, and then we're going to go to Social Security company, and then we'll put here 696.47, and then we're going to go to Social Security employee. Again, all we're doing is we're transcribing what we wrote down from what that payment should have been, and then we're going to go to it would be federal withholding. We already did that, so now we're going to do Medicare company. So that's 162.89, and then Medicare employee negative 162.89. So I would call this is the long way of fixing it. Okay, so the long way of fixing it, it's making the adjustment over here because my balance sheet is already okay. Here where it says accounts affected, I have to make sure that I do not affect the accounts. That's an extremely tricky situation. Okay, so let me explain the premise again. We wrote the check to the government. The government cashed it. The banks have been reconciled. I don't want to delete the check. I'm squared up with the government. All I'm trying to do is get the liability away from this screen, the screen that's in the background. This is a technique that you're going to use. You're going to come in here and manually remove it from the screen and tell it, do not affect my accounting because my accounting has already been organized and taken care of, and that's good to go. So this is technique number one. This is when I don't want to delete that check because that check's been cleared. I don't want to mess up my reconciliation, and I just want to fix it from this screen. So I'm going to click do not, and this is the most common error, is not knowing what to press in this side. So I'm going to put do not affect accounts. I'm going to hit OK, save anyway, and then my liability should now go away from this screen like it's supposed to. So it's completely away from this screen, and then when I go into my balance sheet, okay, my balance sheet remains the exact same because that action was not supposed to mess up my liability. So that was technique number one. So let me go ahead and click. So again, I'm going to delete that adjustment by clicking on Adjust Payroll Liabilities. I'm going to click on Previews. Then I'm going to go to Edit, and then I'm going to click Delete Liability Adjustment and hit OK. So I'm going to go back to having the error here. Okay. So the second way, so that's the second technique. The second way to fix this is to use some sort of clearing account. Okay. And then I'm going to go ahead and just find that transaction here. So I'm going to click here on All and go down to my payroll liability. There it is. Let me spot it. There we go. That's not the correct one. It's this one, the check. Okay. So the second way that you can fix it is by sending this, instead of to the actual liabilities account, send it to some sort of clearing account. So we can use employee advances if there is that one, because it doesn't really affect an employee advance, but that's a common one that I like to use. Or if you happen to have a payroll clearing account, you can use that as well. Just to I'm just gonna create one just in case, because it is the most common case. It's a payroll clearing account, so I'm gonna go ahead and do that. So I'm going to use a payroll clearing account. That's the most common thing that people do. So I'm going to send this to a payroll clearing account, again, without deleting the check or anything like that, because, again, I want to protect the check because I already reconciled it, whatever the situation may be. So I'm going to send this to a payroll clearing account, hit Save and Close. It must be a bank account. And then when I come in here, I'll make the actual payment. So I'm going to go to View and Pay, make it look like I'm actually making the payment right there and then, even though I made it before. And here under the bank account, I'm going to pick the payroll clearing. That way the money comes in and money comes out, the way all payroll clearings accounts are supposed to go. And then I make sure that I match the checks, and I put here EFTPS, and I'll hit Save and Close and close that. And again, my P&L should not be affected because that wasn't a P&L issue, and my balance sheet should now be back to normal, where my 941 shows to 0. And then when I go into employees, I don't know if I showed that part, I no longer see that liability there. And then the third way of doing it, which I won't do the example just so I can get to the other examples, the third way of doing it would be to actually just delete, I'll just do it, is the correct thing to do anyway. So the correct thing that you would have done, again, assuming that I don't, that check hasn't, that check itself, where is that check? That's going to be here on the payroll clearing account. So assuming that check hasn't been cleared and I really, don't need to go through a clearing account of some sort, and I can delete it and recreate it, the right thing would have been to delete the actual tax payment check that was being used wrong, and then using the liability check instead of out of the payroll clearing, out of the correct actual bank account that it's supposed to be. And again, that very last one that I showed you just now, which is creating the actual tax payment the way it's supposed to and deleting it, that's only if the banks are not reconciled and you don't want to mess up not a current period, so you don't want to mess up an old period. So those are basically the 3 ways to fix that common mistake. All right, let's see. Some of these slides, I think, so this slide, the to fix slide, actually has some errors, so I'm going to correct it and email you the corrections with the correct step-by-step instructions. Let's go to common error number 3, paying a bonus with a regular check or paying any sort of check or paycheck with a regular check. Now, what is the error right with this? And actually, this is actually way more common than you think, where people just think, oh, it's a bonus check, so I can just write them a regular check. The problem with this is your year-to-date payroll is going to be incorrect, right? Because your bonus is not going to be in the year-to-date payroll. Your payroll liabilities and payroll taxes are going to be wrong because you were supposed to pay taxes out of that check. And obviously, your W-2 will be wrong. So the real correct procedure is to get all the employees to give you that money back and reissue a new bonus check that is net of taxes. Okay, that's the correct real procedure, but I'm telling you, most of these bonuses happen anyway during December, and then when we come in to fix it, it's somewhere around February, and the banks have been reconciled, the forms have been filed. I mean, it's all sorts of weird situations where it's going to make it very, very difficult for us to actually go back and fix something like that in the past. So the way I recommend fixing it is treat the bonus check as if it was an employee advance. Okay, we're going to go ahead and change whatever they put there originally, whether they put cash or labor or they put office supplies or ask my accountant, change that to employee advance, and then create a gross up check that nets to 0 to figure out exactly what that should be. So I'm going to show you what that would look like, and you may, again, you may have to convince your client that they did something wrong and now they have to pay the taxes accordingly because they did something wrong. So I'll show you typical examples. I'm going to go ahead and create a check, and I'll create a check to one of my employees here, to David. Okay, and I'm going to put here bonus, like a lot of people do, like they'll create some sort of bonus and commission check and put it there, and they'll put 500, and we'll go ahead and just put save and close. So that is wrong, absolutely wrong. It's sitting on the P&L under bonus and commissions. Let's say you close the period. There's really not much you can do at this point in terms of changing the previous period. So the correct thing would be, if you're going to report it on the current period, is to change this to an employee advance and then reverse it back to where it's supposed to be. So this is how you go back and correct it. We'll go into this check, and we'll put here employee advances. Okay, and then I'm going to hit save and close. Okay, that way it's not showing in there. And then I'm going to create an actual real paycheck for it. Again, if it's a current period, delete it and do it correctly. If you have not given the check to the employee yet, delete it and do it correctly. If the employee hasn't cashed the check, get it back and do it correctly. I'm absolutely in agreement that that's the way it should be. Some people are commenting saying, why you're not deleting and doing it correctly? I am saying that we're correcting errors from the past and we're trying to make good of them today. So this is the one check here sitting there that is not affecting their current payroll. So what we're going to do is we're going to create a payroll by itself. So we're going to go to pay employees, and then we'll do an unscheduled payroll. Okay, we'll select David Smith here, and then we'll hit continue. Okay, and then we'll click on open paycheck detail. Okay, and you see here where it says enter net calculate gross. It's a really, really important one. So when you click there where it says enter net calculate gross, we're going to put here 500. So I'm going to show you this one of the ways you could do it. we're going to put here 500, and then this is called the gross up technique. So if I do this, right, and I put a net check for 500, QuickBooks will actually calculate for me what my real salary would have been with all their withholding, Social Security, Medicare the correct way to arrive to 500. This is assuming that the owner or the management says, you know what, we screwed up, we'll pay for the additional taxes, let's report this correctly the way it's supposed to be, and then we'll gross up the check. And because we're not going to issue an additional check, we're going to go ahead and come in here and we'll do employee advances, or the employee advances, and then we'll go ahead and create this payroll item as a deduction, and we'll make sure that we'll tie this over to employee advances. Perfect. And then we'll hit next, and then we'll do tax tracking none. Very important, common mistake that people put compensation or something like that. It's not the case. This is none because in essence we're doing this outside of the tax calculation. This is all after tax money. And then we'll hit next, 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 finish. Hit OK, and we'll put here 500. And then basically what the employee advance for 500 will do is net out the check amount while correctly calculating the gross income that the employee should have received and the actual taxes that they're supposed to. So we'll go ahead and hit save and close, and I'll do create paycheck. And then at that point, obviously, print or create. If you want to see what the pay stub looks like for something like that, it will just look like this, net page 0, and then basically the employee can know. So this technique itself, what it will do is, this technique, it will cost the employer to take the responsibility over grossing up the pay, and the employer is 100% responsible for paying the taxes that they prepaid with that. And I'm going to show you sort of a different way around it, where the employer does not want to pay the taxes, they want the employee to pay the taxes. Well, we will do something else. I'll show you exactly what I mean by that. So let me just look at the P&L here real quick just to make sure that we're doing here fine. Let me turn this off. That shows all that way that my balance sheet's a little bit more clean. Okay, I have no employee advances here. So let me go ahead and delete that paycheck. So let me go into employees, David Smith. I'm going to delete the paycheck, and then I'm going to use the exact same example here. So I still got this one check for $500 being written to David Smith going into employee advances. So what I'm going to do is, instead of creating the gross up check so the employer takes the responsibility over paying this, we are going to do we're going to do it in a way that the employee itself pays the taxes that they're supposed to. So the way that will work is, let me go ahead and create the next paycheck for David. I'm going to hit continue here, and then I'm going to go into David Smith's paycheck. And what I should have had is, to make things a lot clearer, so I should have an item name called bonus. Okay, and I should have created this, an item name called bonus and all that stuff. Okay, that goes into wages like normal. And I'm going to put here 500 because that's the actual real bonus that they got was 500. However, when you come here into item name, I'm going to go to employee advances, and then I'm going to put here negative 500, basically taking back the 500. But just so you know, this may be transparent to the employee because they may not understand the mechanics of it, but just so you know, it's the employee at this point, the one who's paying their own Social Security, Medicare, and federal withholding. You may not see it the way it's being displayed, but by doing it like this, you are not grossing up to 603. Now, the employer is still paying the employer portion of the taxes. You're not going to be able to avoid that. For sure, 100%, that is not something you can avoid. So from that perspective, you're never going to be able to avoid the employer paid tax liability, but the employee through this technique will pay. And this is the easiest way to prove it. I'm going to show you. I'm going to put this to 0 and put this to 0 because sometimes it's difficult to explain. But under a regular circumstance, this employee would get a check of $1322.17. I hope this is clear for most people. So we got $1322.17. If I actually add a bonus of 500, the check would go up to 1658.92. But I already paid that bonus. I paid it last month, last quarter, whatever. If I actually go back and put the negative 500 here, see how the check is now down to 1158, not 1322. So the employee is, in fact, paying for it. Now, could you somehow kind of hide it by just lowering it from the withholding, and so you can get the employee back to the regular paycheck so they don't feel it? You could, but you're doing something semi-deceitful. And this is a common mistake that people make, which is you're making it look like the employee is not paying that tax, where maybe it was implied because of the way it was paid. Either way, the legal thing to do is to pay the taxes on it, both from the employee perspective and the employer perspective. So there's just no possible way that you can, quote unquote, get away with doing it wrong. You just got to do it correctly. All right, let me take some Q&As. Michelle, are there some active questions you want to ask me, or should I read them?
Yeah, there have been quite a few. I've been going through a lot of them. Somebody was asking again, how do you clear the employee advance account? And I think I got that there.
Okay. Yeah. So let me answer that one. I was reading that.
Okay.
So let me go ahead and hit save and close here, and then create the paychecks. And then I'll show you. I'm going to go into the balance sheet. I don't have to manually clear. It's a good question. The answer is I don't have to manually clear the employee advance account. So let me just show you. I have to turn on all the active accounts here, and hit refresh. It should be here somewhere. Refresh. Oops. Let me do all the non-zero. Sorry. Okay, so I'm going to have employee advances here somewhere. There you go. 0. If I double click on that, you see the history. You see the debit for 500 when I actually lend the money, and then we see the paycheck of 500. So there's no additional thing that you have to do to clear it. Essentially, what we did is we cleared it by including it in there. Okay. Any other questions, Michelle?
I might just add on that one, Hector, that the other thing that you can do in that employee advance account is you can actually reconcile that account, just like you do, your bank accounts or your credit card accounts. You can actually reconcile it. So if you're looking at the register for the employee advance account, you can see the things checked off that are cleared. So that kind of helps tracking balances due on employee advances or things like that. Now, here's another question. The net payroll calculation feature. Somebody asked if it's only available in 2016, and I know it's been around for a long time, so it is available in older years. But isn't that only with the enhanced payroll for accountants?
Yes, yes. Only the enhanced, yes, only the enhanced payroll for accountants, the enhanced payroll for accountant subscription, the one that comes with like the 50 EINs for pro advisors. That's the only one that can do it, and it's since version 2011 or 2010, I believe. It's been out for a few years actually. It has to do with the version of payroll that you have.
Okay, very good. Now, Hector, somebody said, can you please demonstrate the payroll clearing method of correction again? This is not on the Intuit PDF.
Payroll clearing or correction. Did they mean, okay, so maybe they meant this. I go to banking, reconcile, and I go to employee advances and hit 0. And let's say I'll do here continue, and then basically I can use, I can just click columns to display, and I can display the name like this. And then what I can do, assuming that I have a whole bunch of these, I can actually go in and just, I'm going to have a paycheck. I'm going to have the advance on the right side. This is the advance. I just double-clicked on it. And then I'm going to have the paycheck on the left side. I'm going to double-click on that. So I'm able to tie in, as many paychecks as I had to one particular advance, assuming that because you could pay this back in multiple instances as well, right? So it can't be, so I'll show you that example. I think it'll be the best thing is to show you that example. I'll do it right after the CPE keyword. So I'm going to show you that example right after the CPE keyword. Let's go ahead and launch the CPE keyword because I know some people leave right on top of the hour. So I'm going to go and launch that. And so I'm going to show that. And Michelle, what other questions are there so I can show that as well as the other example?
Okay, just one second. So there's a lot that came here just at the very end, and we've
Right.
just trying to look through of them. Um, Somebody says, I think the regular subscription lets you gross up, but you must use bonus as the payroll item. So I'm not sure about that.
I've never
Somebody
done
else
that,
just,
but doesn't sound impossible.
okay, somebody else just says, how do I add a client to my 50 employers allowed in the enhanced payroll for accountants?
That would take me 50 minutes to show to do it through the system. So I would definitely Google it or ask Pro Advisor support for that. And by the way, you have to pay for that. So if you're not paying for it, you don't have it. So you don't have it automatically. You pay an extra $300 a year, I believe, for that subscription. So just to make
Right,
sure that
right.
it's not something, yeah.
Okay, and here's another question. Somebody's wanting to know about doing a direct deposit for a contract employees. Now, you definitely can do direct deposit for employees. For subcontractors with QuickBooks Desktop, you can do direct deposit for those vendors that are subcontractors. Is that correct, Hector?
So I would say to the person that said contract employees, just kind of get into the habit of never using the word employee to refer to a
Exactly.
contractor, just because of legalities. In some states, it's even prohibited by any manager or anybody of the higher tier of the company to use the word employee towards a contractor, because that in itself may make him liable for paying payroll taxes. So so for a contractor, through the QuickBooks Desktop Enhanced subscription, you can actually pay direct deposit and pay, I believe, 50 cents or something like that per actually maybe a little bit more, maybe like $1 per direct deposit. But yes, you could do direct deposit for contractors, not through QBO, only through the desktop. All right, so we're going to leave the CPE keyword up for well, that's it. It's been 2 minutes. So last
Yeah.
chance to put your CPE keyword. Let's go ahead and close that poll, and let me
One
go ahead.
more.
Yeah, go ahead.
Let me just on that direct deposit for contractors. No, that is not available in online payroll.
Not
She's
available.
asking about Intuit Online Payroll for accountants. I don't think it's available with any online payroll subscription.
Online payroll for accountants it is. Online payroll for accountants it is. It's not inside QBO, it's outside QBO.
Okay, so with online payroll for accountants, you can direct deposit for vendors.
Online payroll, IOP4A, yes.
Okay.
Okay.
All right. Thank you for
Okay.
clarifying that.
No problem. So about the question earlier is how do you clear or how do you reconcile an employee advance account? So I'll show you real quick. So let's say, for example, that the employee chose to, let me just unlock the pay here. Let me unlock the net pay on this one. So let's say the employee chose to, instead of taking that hit of $500 on one paycheck, they chose to separate it into two separate paychecks. That's possible. So what we can do is we can take in, let's say, $250 of the advance here, and then we'll only do a bonus of, let's say, $250 here. That way it has a much smaller impact into their paychecks. So I'm going to click OK, save anyway, and then I'll go ahead and create one more paycheck for this one just to kind of illustrate the point here. Because as you can tell here, as I'm reconciling the employee advance account, this thing is not going to be clear to zero. I'm going to be off by $250. So I'm going to go into employee, pay employee, schedule payroll. Let's say that on the next payroll, right, whenever that is, that's going to be done. So let me go ahead and come in here, and then on this salary, I'll go ahead and add that bonus. So we're basically breaking down that $500 bonus that we paid earlier into two future bonuses. And then I'm going to go here to employee advances and put $250. Now, one thing I want to tell you is legally from IRS's perspective, this may not be cool, right? Because when you actually paid was when you were liable for. So I don't think this would pass muster in an audit. I mean, there's a whole nother situation. This is more of a QuickBooks thing, not necessarily a tax thing. So yeah, I would definitely not use this video during an audit to say, no, I did what Hector told me, and that's why, we future dated all those liabilities. It doesn't really work that way, guys. So if you were to split it off like that, when you go reconcile the employee advance, you can actually select two paychecks, clearing out the 500, net it down to zero, and that's kind of nice about reconciling any balance sheet account that you actually kind of get that. All right, so I'm going to send an email blast with with an updated PDF with a couple little corrections that I made there. The recording will be available in YouTube. Give us a day or two. Next, in the next couple of episodes, in 2 weeks, we'll do advanced QuickBooks Online tips and tricks. Then in 2 weeks after, we're going to do a deep dive into job costing that's also going to be ACE certified. And then we're going to sort of alternate desktop online until we get to October. Hopefully, maybe end of September or October, we'll do what's new in QuickBooks Desktop 2017. So the only topic we have really set in stone is the ACE course and 825. Otherwise, these topics are still kind of open, so we use that advanced there as a pseudo for we're not sure exactly what the topic's going to be. All right, Michele, is there any other questions that I should answer before we leave?
No, I think we got quite a bit of them covered, so thank you all for joining us. I will miss the next QB Power Hour on August 11th, so you'll have Hector for that one. But I want to thank you guys all for joining us for this one, and Hector, great job as always. Thanks, everybody. Talk to you later.
Bye, everybody.